Allan Kilavuka is the Kenya Airways Group Managing Director. Now, prior to the updates on the airline's ongoing search for a strategic investor, he explained why the firm is finding it rather difficult to replace its Embraer E-190 aircraft from the fleet.
First of all, Embraer is a fantastic aircraft. I just want to register that. But it's not an appropriate aircraft for the airline at this moment in time because the routes that we have right now are already mature. So they need a bigger capacity aircraft so that they can carry all the luggage and more passengers, and they're more profitable because then the load factor is much higher than we would have on the Embraer. Now, the challenge we're having right now is because of the delayed manufacturing of new aircraft, the aircraft that were there, that were going to be released into the market, both second-hand and new, are unavailable. In fact, there's also an additional problem. We also have shortage of spare parts, both for new aircraft and also existing aircraft. So there's a chronic shortage of aircraft in the market. And in fact, those things that are there are either not appropriate for us because either they are single cabin aircraft, or maybe the engine situations are much more deteriorated than we'd like. And that's the situation we're currently having. So we really are trying to rethink very much. Remember, we are trying to also simplify our fleet. And so we cannot just go for any aircraft. We're going for specific aircraft that will make our fleet simple enough. So this is a challenge we're having. We're trying a lot of working around the situation, but it's a an industry-wide problem.
And by simplifying the fleet, I presume you essentially want to keep it within the Boeing family, because most of the KQ fleet at the moment is largely Boeing aircraft, I think with the exception of an Airbus A330, I think that was leased for some of the flights that we're seeing into Dubai.
Yes. So simplifying the fleet is going to either Boeing or 2 fleet types, or Airbus, again, 2 fleet types. So one of the 2 would be simplification of the fleet. Right now, of course, we are flying Boeing. And so we are currently using our current fleet to grow. But we haven't shut our doors to Airbus. We're also evaluating Airbus. We want them to give us an appropriate solution, which is if we are to move to Airbus, what are the transition costs going to be and who is going to cater for those? And are they going to support us in the transition if we were to transition? So we are considering both of them, but in the meantime, of course, we would onboard any 737 that are available in the market to replace the current Embraer.
So let's talk about the search for the equity investor, because the last time we spoke, the sort of ballpark number that we're bouncing around in order to get KQ out of negative equity territory, but also give you a bit of working capital, was around $1.5 billion. Is that still the sort of number that we're looking at?
Yeah, I mean, that's a number that will remove us from, like you rightly say, from the negative equity position. It's not a hard and fast one because obviously that's a big number to look for. And also we need to look at the valuation of Kenya Airways to make sure that the strategic equity investor is investing 49% and lower based on the requirements by the Kenya Civil Aviation Authority, that any flag carrier like us has to have 51% or 50 plus 1% ownership of Kenyans. So with that in mind, we will take that in mind, the valuation of Kenya Airways and the need that we currently have. But to be able to eliminate the negative equity position, which currently is 123 billion Kenya shillings, so around about, let's say, $1 billion. Yeah, then that you would need $1 billion to eliminate that completely. But again, it depended on many things, valuation of Kenya Airways, and so on and so forth.
So assuming that the search for that equity investor is wrapped up by the end of this year, so let's say for the sake of argument, early part of Q4 this year, can retail investors in Kenya then expect the firm's shares to be back to trading on the NSE by the first quarter of 2025?
Yeah, I would say yes, because what is holding us back is to complete this transaction. And once it's done, yes, so we would then go back into NSE.
Can you give us any sense of what timelines, or rather indicative performance markers we should be looking at between now and Q4, or rather now and the end of the year? What sort of what steps need to happen between now and you getting the equity investor on board, assuming that negotiations are completed on time?
Yeah. So we have a 2-track process. The first track is directly negotiating with potential investors. So that's what you're doing right now. So having discussions with some potentials, and that's, we have some which are very hot, some are, medium, and some are really cold. So those discussions are ongoing. But then we have a financial advisor who we are just about to onboard, and that financial transaction advisor will help us formalize the process and also look for additional interested parties. Now, the reason why we say December is because that whole process is supposed to take about 3 months from the financial advisor position to the point that we narrow down and select an investor. Now, in December, we expect that we will have selected this investor, and after that, then we would agree on how the settlement will take place and how they want the airline to look like, of course, in line with the other shareholders.